Welcome to TradeTheMBI.com. This is John. This report is for the 30th of January, and as we approach the end of the month, we're still going to be pretty much right about where the highs are. We're actually going to be slightly above where the opening was for the month. Eh, Not horrible. Again, we're back and forth, and of course, again, this gets back to the story. If it was all the China AI, we wouldn't be seeing a return like this. So it's just disappointing. The reality is we've got issues. The Fed is battling pretty much where Trump is. He's already criticized the situation. They just don't know what to do because they're uncertain. They just assume that he's going to do these random tariffs all over the place and that it's going to automatically cause inflation, and therefore they're on hold, which uh, it's amazing to me that they could be that foolish, or they just pretty much want to hamper any efforts towards seeing a quick revitalization because they think that that might spur some other kind of inflation, which unlikely because the more competition things you have out there, the lower prices are going to be. The key is energy, and that's what it all comes down to. When we look at the readings, you still have Magenta leading. Uh, Nothing strange there. Short interest, not too strong. This potential change in the DOC orange, though, got to watch because the reality is you expect that to move below DOC red in order for any kind of continuation to have any leg. If it pops up in between, you're likely to get more sideways action, particularly if you have green and red right here. Staying below the negative 13.5, it's problematic for bulls to try and push things too far. So they're just going to hit some upside resistance. Nothing traumatic, though. And again, here we go back into treasuries, unable to really get a footing as to what's going on. The Fed's not going to do anything, and I think that's generally the message they're sending. They just don't know, and they're probably not going to do anything until the middle of the year or potentially later. So they're just kind of remain in that, I would call it a neutral stance at this particular stage, which is slightly negative simply because rates relative to where people would like to see them now relative to where inflation is, they're low. So there's that. This, however, is the key to watch. We were just talking about this, that we needed to see oil back down into the 60s, and then it needs to break below the 62 low. And if it gets into the 50s, then you have the real opportunity to see some quick economic growth. Can they reach that point where there's enough equilibrium? I mean, there's still draws on inventories, so it could take a little bit longer, but it's in the right, definitely the right trajectory, that's for sure. And it bars any unforeseen international situations and things. The temperature of global conflict seems to have gone down quite a bit when your whole focus now is just Greenland or Panama. It's not really the scariest things compared to what we were talking about with the conflict in Russia. Of course, that's not resolved, but in a sense it is, because if the U.S. isn't funding and pushing it, then it's just going to die its own death, which is not going to be in Ukrainian favor, but it's also been at a cost to Russia as well. And that doesn't change sanctions or any of those other things. The euro, from its standpoint, you can see with the situation, you've got elections coming up in Germany. It doesn't look good for them. In that so there's a lot of turmoil there, and the fact that we're even at this level is still crazy high. Gold, no surprise there, pushing up to that, just like we expected. This isn't anything new. Inflation's not tamed yet. There's no question about that. It's going to take some time, and in the interim of that, you have the potential that the market's going to believe that tariffs are going to do some kind of craziness to inflation, and it's all supposition. But you trade the rumor, sell the news. That's always been the axiom, and no different now. And Bitcoin, of course, recovering as well, moving back towards its highs. And ETH far behind, but also it's going to mimic that play at this particular stage. So from that standpoint, things are all pretty clear. Let's take a look at the 50K. And you can see it was mostly down day and then it recovered middle. And you can see from a post market standpoint, they just brought it right back up to the same level. So no real shocks there. You did have MBI weight poke up here, and you've seen a turnaround of the magenta. So that puts a little bit of interesting pressure because the secondary rise of MBI white here with a crossover of the magenta is definitely going to pull things back a bit. So that's worth noting for a intraday kind of setup there. When we look at it from a lower time frame, you can see it was mostly selling throughout, and then once they had enough puts built into the equation, skyrocket back up, wipe those out, and the option guys are very happy with how the week went, and that's just keeps it nice and clean. As always, though, anything relevant up on the Skype chat for you. Have a good one. Trade well.